Hi everyone, I'm Paul and welcome to my review of Lesson 30 of ICT's 2022 Mentorship Program. Today's video is going to be a pretty short one because we're just looking around the price action, in this case on the NQ, around a high impact news event. In this instance, the news event is the Fed chair speaking at 2 p.m, which is obviously in the afternoon part of the session. But before we do, if you enjoyed today's video, please make sure you give it a like because that will help other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy, and most importantly, free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description, which will allow you to subscribe to my free weekly newsletter and to join our Discord. Now that that's out of the way, let's jump into today's video. Today's video is Lesson 30 in ICT's 2022 Mentorship Program. So as I said in the beginning of the video, it's going to be just a short one today, and our outline is looking at volatility around the Fed chair speaking at 2 p.m. in the session. And for today's example, we're going to be using the NQ on the 17th of May. So looking at our daily chart on the NASDAQ, and this is pretty much the same picture that we looked at in lesson 28 and 29 reviews. And so we had this bearish trend, we had the market trade down into sell side liquidity relative equal lows, which was just down here. And then after the market reacted to that, we had the anticipation of higher prices, so we had a bullish bias because we were looking for price to reach in to these relative equal highs and this volume imbalance just above those. So on the 16th, we got a reach higher, even though we got a down day. And then if we look at the next day being the 17th, which is a trade that we're going to be looking at today, you can see we take out those relative equal highs, that buy side liquidity. So now let's zoom into our 15-minute chart and start to look in a little bit more detail around the price action before and after the Fed chair speaks at 2 p.m. So zooming into our 15-minute chart now, I'll just quickly orientate ourselves on the chart just so we know where we are. So we have the midnight open here, so that's midnight New York time, extended the midnight open out there. And we have our 8:30 open just here in red, and that extended out as well. And then we have our equity open here at 9:30, and it also extended out as well. So you'll remember from many of ICT's teachings that he, strongly recommends not participating in the market around these high impact news events. He does make some concessions though, that for example, this one where we have the Fed chair speaking at 2 p.m. So you can see that's in this orange box just here. You could take trades in the AM part of the session, but you'd want to be out prior to lunch, going into when that high impact news event's going to come out. Now, one of the interesting things, and we'll look at this later on in the video, is that if you did choose to trade around this particular event, is that the actual setup taught in the 2022 mentorship program doesn't present itself. And so I think the thing that's important to note from that is that when the markets are really in sync with the mentorship model, it's going to protect you against a false move and actually get you set on the right move. So we'll have a look at that in more detail at the later half of the video. And for now, we're just going to have a look at this price action here. And so you can see as we go into the morning session, we don't quite take out this buy side liquidity, but we get this, fairly severe reaction as we come into that equity open at 9:30, and the market sells off pretty heavily. And you can see we then react to this fair value gap that we have just sitting out here, which was from the London session. So the market trades down into that, it dips quite deep into that, all the way into this order block just down here. You can see we get a reaction and we race back up as we go into the lunch period. We then consolidate, we come into that announcement or the Fed chair speaking at 2 o'clock, and you can see the market reacts, quite savagely to that. And so we have the market race up to start, and it takes out obviously all the buy side liquidity that's resting above these highs just here, and then it immediately trades downwards. So you can see the volatility that we can get around these news events, which is why ICT suggests you keep away from them. Then we take out all the sell side liquidity here, but interestingly you can see the fair value gap that we have here on the 15-minute chart as the market traded higher into lunch. You can see if we extend that outwards, the market traded down into that. Now it obviously wicked very heavily through that, but you can see how the bodies of the candles respected that fair value gap before it traded higher. And you can see even these wicks, if we've extended this 15-minute fair value gap out from the London session, has caught both this down move and then this down move before the market has then traded higher. So remember, going into this particular session, we had a bullish bias, and you can see if you're looking for long setups, even here on this 15-minute chart, that would have set you in good stead. And you can see even on this 15-minute chart, there's been no setups to the short side. There's been no sell signals triggered. And just lastly, before we start to drill into the lower time frame charts, if we have a look at this move from here, so if we run our fib from the low to the high of this move, so this is the peak of that volatility around the Fed chair move, you can see this pullback we have here is actually an optimal trade entry because it's between the 79 and 62 range of the fib, and you can see how quickly the market reacts to that before it then races away to the upside. So we're going to zoom in now to our 5-minute chart, and we'll have a look at a setup that we would have had in the AM session that we could have obviously taken advantage of prior to the Fed chair speaking at 2 p.m. So zooming into our 5-minute chart now, and if we specifically look at the AM part of the session, so that's this particular piece of price action here, so you can see around 9 o'clock we have the equity open and then the market sold off fairly strongly here. Now if we actually are looking for our model, you can actually see we get it right here. So there's a fair value gap just right there, so that's a bearish fair value gap obviously. So you can see we have this run higher, we take out the buy side liquidity just here. I'm just going to mark this up as we go. So you can see that buy side liquidity has been taken out there by this particular move. We get our displacement candle and we get this big displacement downwards, and you can see we break market structure just here. The market then trades back up into that fair value gap. So remember, this is on our 5-minute chart, and then the market trades lower, and you can see we go all the way down into, we've got like a fair value gap down here, which we traded into. Now, interestingly, while we're talking about the fair value gap, you can see that we have one just here. And again, this is on our 5-minute chart. And this would also be confluent with the fair value gap that we had on the 15-minute chart, which you can recall was from the London Open. So this is all the way back here. You can see the market's traded into it quite neatly here on the 5-minute chart. So again, we have confluence with that particular zone on the 15-minute and the 5-minute from our London Open. This is also that fair value gap that we had on the 15-minute chart, just overlaid on our 5-minute chart here. So as we look at our 5-minute chart, you can see as we go into this announcement by the Fed chair, or the Fed chair speaking, I should say, you can see we actually don't get any setup on the model. So you can see we touch in, we almost take out this buy side here, we just miss it by I think about a quarter of a point, and then the market sells off fairly aggressively. We get that big volatility where the buy side's taken out and then the sell side's taken out, and then you can see the market then reacts to these fair value gaps before racing higher. Now, as we zoom into our 1-minute chart, you'll see that we get the mentorship model triggering off long entries, but we don't get any on the short side. And this is obviously in line with the bias that we had going into the beginning of the session. So looking at our 1-minute chart now, we can see that the mentorship model triggers here. So we have on the 1-minute chart, we have our bullish fair value gap here. So this is that one that we also had confluence on the 15-minute chart with, as the market, traded into that high impact news event. This is the Fed chair speaking just here. And you can see quite clearly in the price action here that no sell setup has been triggered as the Fed chair has started to speak. It's only once we get down here and we come into, this confluent bullish fair value gap that we trade into here, that we get our model actually give us buy signals to go long. So we could have taken it on the dip down into that bullish fair value gap just here. We also get our order block entry just there. So if we were waiting for price to retrace, you can see it comes in and that candle, dips really neatly into that fair value gap and into that bullish order block before the market then starts to take off. And if you look closely in here, you can see ICT's executions. So he took one just here. Now he talks about it in the video where he actually missed the entry. He was obviously looking at getting set at the low of that third candle there. He slightly missed it. and then he didn't take any other trades. He didn't pyramid any trades in after that point, and you can see that he then exited up here at 12.55 3.25. Thanks for watching my review of lesson 30 of ICT's 2022 mentorship. Today's video really shows the strength of the 2022 model, and it shows even if you do choose to trade around high impact news events like the Fed chair speaking, is that the model can actually keep you safe when it's nicely in sync with the market. If you enjoyed today's video, it would be great if you could like it, because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. And remember, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description where you can sign up for my free weekly newsletter and to join our Discord. Thanks for watching, and I hope to see you next time.